Hi everyone, thanks for checking in. This is Adam here at Low & Co, and today we're looking at the Wellington market, the real estate market of course, analysing the data for the month of July 2023, comparing it to the last year or two. Overall folks, Wellington remains in a seller's market. We do have one unusual data point, and that specifically is that the number of sales in July was relatively weak again after two very strong months in May and June. I suspect that might just be standard, sort of data variation, but time will tell, as opposed to a new trend. And my message to buyers continues to be buy now before it gets more difficult. And to the sellers out there, it is possible to sell out there again. If you are thinking of selling, now's not such a bad time. So let's get into the detail. Median sale price, July 2023, 737,000 versus 809,100 a year ago. That's down 9%. 9% is a smaller drop it continues to get like a smaller drop as we progress through. However, I would say that 737,000 is the lowest median sale price we have seen since about late 2020. Overall, we've seen median sale prices broadly stable since about a year ago, July 2022, but July 2023 at 737 is the lowest that we have seen since the peak of the market, basically. So let's see if that's sort of sign of a new trend, or if it's just monthly variability. Given what else we've seen in the market, I suspect it's more just monthly variability. As you'll know, if you follow these videos, I don't pay too much attention to that median sale price because it reflects just as much the mix of sales that take place as opposed to the actual underlying value of properties. So the best gauge, in my opinion, is the Real Estate Institute House Price Index. So let's now have a look at that. Now, you see here, this is what I call the league tables. Wellington has still fallen further than any other region in the country at just under 25%. It has been bigger drops, so it has recovered a little bit from its absolute trough. Other locations like Auckland, almost 22%, so that's nearly caught up. And the gap between other locations and Wellington has definitely narrowed through the course of this year. If you look now at the figures for the last 12 months, the 1 year results, see there Wellington at just about 10%, Auckland just over 7%, and New Zealand almost 7%. So over the last 12 months, the degree to which different locations have fallen is not too different from Wellington as opposed to the full drop since the peak. So over the last 12 months, the drops have been moderating, and Wellington hasn't been falling that much faster than everywhere else. Look here across the country, all of the different areas there are over 3 months, and just have a quick scan across those numbers. You'll see that there are a bunch of positive numbers in there and some negatives, a real mix of some locations have increased in value over the last 3 months, some have fallen. Nowhere really by huge amounts, but it's just interesting because a few months ago, pretty much all of those numbers would have been negative. So certainly this is a sign that the country overall seems to be turning a corner, and there are various commentators out there that are saying the same thing. Looking now at the Wellington region figures there, broadly you can see there over the last 1 month, 3 months, and looking at the graph you can see the same thing. Values have been roughly stable over the last 3 to 6-ish months. It does bounce around a little bit there, and as you can see, both the orange and the blue graph, the orange graph being the 3-month drops and the blue graph being the 1 month results, they've both taken a dive in July, but as you can see there, it is a bit like a sawtooth. It does tend to go up, then down and up and down. The overall trend is recovering, and over the last few months it's been broadly floating around that zero mark, the x-axis. Look there at the 3 months results again, and you compare the New Zealand result to Auckland and Wellington, and you see there that interestingly Wellington at 0.1% for the last 3 months is less than Auckland at a recovery of 1.6% and New Zealand overall at 0.6%. So does this mean that Wellington's recovery is now lagging behind the rest of the country? As I indicated before, I don't think so. I think this is just normal data variability. Again, refer back to the graph there. You see the sawtooth approach. It's just that in July it happens to have been the dip, not the upswing. we tend to have the up and the down and up and down. We're just on the down at the moment. So obviously these things are hard to predict, but given what else is happening on the ground, I don't think this is a new trend. But obviously, I don't have insight into the future. Only time will tell. Just out of a point of interest here, this is a bit of a sidebar, but if you look here at the last 5 years, how much of value's grown in Auckland and how much of value's grown in Wellington City over the last 5 years, on average, only 3%. So we're now in 2023, so the last 5 years going back to 2018. So between 2018, 2023, Auckland and Wellington cities only grown on average by 3%. And I'm just pointing that in there because I think that would be surprising to most people. If you went out there and took a poll and asked how much of property prices increased or changed by in the last 5 years on average in Wellington City or in Auckland, for example, not many people would pick a number as low as 3%. But those are the facts, folks. So in the last 5 years, prices have not risen on average that much in Wellington City or in Auckland region. Again, look here at the Wellington City numbers. If you compare the Wellington City numbers to the rest of the other territorial authorities in the Wellington region, it seems that the Wellington City values have dropped, whereas the other regions have increased in value. Again, I refer back to the sawtooth. Let's see if this is a new trend. It could be. My pick is that it isn't, given the level of activity we're seeing on the ground in terms of open home volumes and numbers of offers being made, but only time will tell. Moving now into the number of new listings for the month, 371 in July 2023 versus 546 a year ago, 535 2 years ago. So the number of new listings coming to the market is still completely anemic. Vendors are still on strike, presumably because they think that now is a bad time to sell. And ironically, this is constraining supply, which actually makes it a reasonable time to sell. It is a better time to sell now than a lot of vendors realise. If you compare then the last couple of months' results there to, the last July's results to July average of 535, we are still seeing, about 1/3 fewer listings than what we normally see for a normal, typical month. And the next graph there makes it plainly obvious. You can see clearly there that the number of listings coming to market compared to what we saw in the same month 12 months prior has consistently between 25 and 45% fewer than the 12 months prior. Now, obviously, as we hit into September this year, we will now be starting to compare it with volumes that were very low from 12 months prior. So I don't expect those blue bar charts to be below the x-axis going forward from about September. Number of sales taking place, 427 last month in July versus 509 and 618 in the last 2 Julys respectively. So this is down 16% on a year ago, down 31% on a year ago. And this is the interesting point. The last couple of months we saw really strong sales volumes taking place in May and June compared to the previous May and June. In July, we saw a drop of 16% compared to last July. Now, the question is this reflective of buyer demand falling away? Again, I don't think so. I think this is just, is it potentially because there are few listings coming on now? The number of listings is getting constrained. There's less to choose from, less properties that can sell, so perhaps a few less are selling. Obviously, there are many variables that drive this data, and it's hard to know exactly which ones are at cause here. But given what else is happening in the market, as I say, I suspect this is not reflective of buyer demand reducing. We are still seeing very strong attendance at open homes. We are still seeing multiple offers, lots of offers getting made on properties overall. So I don't think this is a sign that buyer demand is falling away, but nonetheless, fewer sales took place in July than last July. Median days to sell. How long is it taking to sell a property? So it's still taking around that 50 days, 52 days in July versus 61 a year ago and 32 2 years ago. Look, it's been bouncing around that 50 days or so for the last 5 months, folks. So that is longish compared to what's normal in Wellington, but certainly well less than the peaks we saw sort of 6 months ago, which were into the 60s, 62 and 69 days, I think it was, in January and February or early, 2 months earlier this year. So it's still taking a reasonably long time to sell property, but it is stable, bouncing around that 50 days. Number of weeks worth of inventory. So this is how long would it take to sell every listing that's on the market today if things continue to sell at the same rate and nothing more came on the market. And the answer is 11 weeks. Last month we saw 10 weeks. July a year ago, 24 weeks, so it's a big drop down from where we were a year ago, but it's still a big jump up from where we were 2 years ago, where we were still at an incredibly eye-watering low 5 weeks worth of supply before we sort of hit the peak of the market. So 11 weeks, the average is 14. So 11 weeks is still a significant chunk below the average. Technically, that spells a seller's market because relative to the Wellington norms, we are undersupplied. Number of Trade Me listings, and I'm sure if you're a buyer out there looking around at the moment, you will see, and it's very frustrating for you as buyers, the amount of stock that's on the market continues to drop and drop and drop. And we're now obviously in August, and typically by now we would start to see gradual increases. It's always a question of when does the spring rush start. In an election year, often the spring rush is very subdued and it can be late. So a number of commentators, and this is probably my view also, is that we will see a bunch more stock come on after the election. Obviously, what that means, if you are thinking of selling, then if that indeed comes true and a whole lot of stock does come on after the election, if you do the same, you will be competing with a lot more properties than you would be competing with today if you would list prior to the election. Anyway, back to Trade Me volumes, 1,878 as of a couple of days ago when we're recording this, versus 2,578 a year ago. So that's a big drop of 27%. And an increase of 63% on 2 years ago. Of course, that was before we hit the peak. You see there from the shape of the graph, we have been seeing significant dropping away of gross volumes of listings on Trade Me, but the degree to which we've fallen from month to month certainly is a lot less in the last month than we've seen in the few months prior to that. So perhaps Trade Me volumes are now starting to stabilise a bit. Now, obviously, that will be influenced by the number of sales taking place. And as we just discussed, that is a lower number of sales than we saw 12 months ago. If that recovers again, then perhaps we will continue to see Trade Me volumes continue to be very suppressed. So in summary, folks, Wellington and now increasingly so even New Zealand-wide values are fairly stable. New listing volumes have been consistently low since September 2022. It's really quite anemic. Vendors are on strike, and that is actually, ironically, creating quite good conditions for selling. Sales volumes were weak in July after a particularly strong May and June. Duration to sell at 52 days remains relatively long, but stable and down on its recent peaks. Inventory levels remain at below normal levels, so technically that means seller's market. Trade Me listings 27% lower than a year ago, very frustrating for buyers. A generally firming market across the board in Wellington. As I say, the main exception piece of data to that general theme is fewer sales taking place. Let's see if that continues. I suspect it won't. Message to buyers, don't wait for things to get better. Message for sellers, it's actually not too bad out there, and you might be competing with a lot more stock if you wait till after the election. And I also want to shout out a big thanks to Real Estate Institute of New Zealand and realestate.co.nz. They are the sources of this market data. Thanks for checking in. It's Adam here at Low & Co. If you want any advice, please reach out to me. You know how to get me. Cheers. See you next time.